What's up, guys? It's January 2025. Had a pretty crazy day today. I didn't expect this rally, and I didn't expect the sell-off that led to another rally. Usually, when we get a big up, so we had a big gap up, big down, we get a trading range for the rest of the day. In one aspect, we did get a trading range because big down, big up, big down, big up. It's a trading range day, and it's also contracting. Each leg was smaller than the previous leg. I just think it was really clean price action. Also hard to trade because there's no real pullbacks. I want to talk about this bar later on. So both starting to find support at lows. Daily chart, 15-minute chart, leg one, pullback, leg two, pullback, leg three. I'm interested to see what happens around this low here. We're approaching that shortly. Put a marker there actually. We're approaching that low. And the reason I'm interested to see that is because I think that's a sell. I think there's gonna be sellers there, and I might be swinging a options contract. I might. I don't know. I don't know. I'll have to see the approach, and then I'll short for like 2-3 weeks. I want this. I want another daily chart that I can leave this up. You know what I'm saying? If I was to short here, my target would be back here. And why am I shorting here? Because it's the breakout point. What worries me is that we're in a bull rally. We were bullish for a while now, and that we just bolt up because 3 legs lower, so the structure could be complete. Leg one, pull back, leg two, pull back, leg three. I'm gonna delete this for now. Give you guys an idea of what I'm looking at from a higher time frame perspective. Last few times we touched the EMA, we've sold off, so we've had price structure on the EMA sell off, lower high, sell off. Double top's a little bit stronger than a lower high, so I wonder if we'll make it back to the EMA. We have 3 legs into the EMA, leg one, pull back, leg two, pull back, leg three, then we sell. After that sell off, we'll start to find support here. This low is this low. You guys can kind of see the crosshairs on both charts. I hope it's a little dark enough. Bull's got a doji right here. Rally, sell off, rally. Here's that nice double bottom. Put in today. This is a lower high, lower high, lower high. That's bullish price structure, but we are in bear territory, trading below the EMA. Let's see what the 15-minute chart looks like. That was a news bar. Nonetheless, it was climactic. It raced up, sold off, and then bulls tried to get a second leg here. Leg one, pull back, leg two, strong sell off, leg one, pull back, leg one, pull back, leg two, becomes climactic. There's a hidden third leg. It's a fractal. It's implied, I should say, actually. Leg one, pull back. This candle doesn't really break the high, so there's an intact trend line. This candle breaks, it's a double top, but I count this as a second leg. There's a pullback right here. Leg one. You could still count this as a pullback because it's an opposite bar. We're in a trading range. Break out of the trading range, leg one, pull back, testing the trading range, and it sells off. Leg two, we're in trading range, second leg trap, or you can count it leg one, pull back, leg two, pull back, leg three. Nonetheless, this is becoming climactic price action, and we have a strong bull bar that breaks the high here. Bears actually get a hidden leg with this leg here, so restart the count. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Fails, reverses higher, trapping bears. They're trying to get short here. And we rally, testing the breakout point up here now. Climactic rally with gaps open, big down, big up, and trading ranges gaps get close. And then we have climactic selling. All the bars today were climactic. In trading range price action, it's normal to see climactic bars. That means bars will always look like they're breaking out, but they end up reversing, kind of like this in 5 minutes. Strong sell-off, leg one, and there's a trend line break. Here's the second leg. See that? That's a second leg on a lower time frame. Leg one, pull back, leg two, and then bulls get the rally, 3 legs. Leg one, pull back, leg two, same situation, pull back, leg three. Trading at the swing point, and that'll be interesting to see. Can bulls put in more price action above the previous breakdown level, or are bears going to use this to sell off and create a double top? That's what we're trading at. Really interesting to see. because excuse me, I was expecting more bullish price action because of the gap up. I got trapped around here. I actually, I was trading sim again today with limit orders, but I'm gonna go back to live tomorrow and just start trading limit orders because I'm feeling confident. I had a limit order set. I saw this like get put in, so I had a limit order set below 18. I got tagged on 24. I added to my position and I wrote it down to bar 30. I got filled on 45. I took it to around 51 and I just caught it because I don't know. I got 20 points with multiple contracts. That's 34. But I added and my position was like right there. Like that. I'll give you the exact entry. Yeah, right above 25. I never actually saw drawdown, which is really insane to me to think. And I got out on 30. So I got a little bit more than 1.5 R, which you can't really do trading stop orders. But stop orders do have their advantage because then you could scale into here. Whereas I got filled, I market ordered the high of 45 on the tail. So as it was selling off, I just hit in because I didn't have my limit order there. And then it rallied and I didn't add to my position, but it would have been a great ad. Then we have a triple top here. It's a wedge top. The market vacuums down, testing bar 38's low. I think this is a good limit order buy. It's a tough limit order buy because their approach is very strong. I think the market could have collapsed, but it got three legs, like one, pull back like two, pull back like three. Testing 63 is low now. So let's get into it now. Let's get into it a little more detail. That was a good overview. Gap up, bar one, bear bar, bullish pressure. Bar two, bull bar. Bar three, good follow through. Bar four breaks the bull case for sure. Because now bears are selling at the highs. Sells off, rallies right into the middle of a trading range. Bar five. This is bar five. Big breakout bar closing on us low. Bears are definitely gonna want a second piece. But we've also had a big up, so now it's a big up, big down, trading range behavior. Contracting triangle, contracting triangle. The open tells us a lot. Bar six, bouncing off the EMA. Bouncing off yesterday's close. I don't know if that's the high. Yeah, that was also the high. Bar 81 was yesterday's high. So bouncing off yesterday's high. Leg one, pull back leg two, pull back leg three. Why is that three legs? Well, I'm trying to harp on understanding the bars, and let's just look at it right there. There's your three legs. It's climactic, and we can talk about the legs lower too, actually, real quick. So three legs, where are we? So here's three legs lower, three legs higher. Delete the box and then put it back in. Three legs lower, leg one, trend line break, leg two, trend line break, leg three, wedge bottom into support. Three legs lower, leg one, pull back, leg two, pull back, leg three, pull back, leg four, wedge top into support. So now that's established. Let's talk about it. It also creates a lower high. So we counted three legs lower, strong three legs, after 3 bars of after 3 bars, the probability for a pullback increase, and that's what we see. 1, 2, 3, pullback. 1, 2, 3, pullback. 1, 2, 3, endless pullback. Strong breakout, strong to get a second leg down. 16 through 18, but at the high, the pullback, and they get their 1-to-1 very quickly on the second leg lower. You guys, this is the big 5-minute bar closing on its high with a small tail. Shallow pullback, 25, 26, another 4 bars lower into support off the higher time frame EMA's close and yesterday's close. Bulls get 3 legs up. Leg one, first pullback. This is my favorite setup. And just to be clear, I don't actually trade the 1-minute chart. I trade the 5-minute chart, but we need to start understanding what's going on, where the traders are trapped, how limit order traders are getting trapped, where stop order traders are getting trapped. I do not switch to the 1-minute chart during the trading day. Anytime I look at the 1-minute chart, I am not trading. The day is over, and it's purely just to understand the insides, the candle guts. 1, 2, 3, 4. 4-bar macro channel. 35 is the first pullback. Breakout. Good second leg. Gets a pullback. Strong. This second leg strong to get its own second leg. And then this is strong to get its own second leg, but now we're in a trading range, and you can see how this price action is more sideways. 45, 46, 47. Not that strong, barely breaking out, but just a couple ticks higher than the sell-off bar 44. Then we sell off leg one, pull back leg two, pull back leg three, pull back leg four into support. And now we've talked about this sell-off. Bar 15, breakout bar, but what's it breaking out of? Nothing really. It's only breaking out the previous candle, and that ends up being a test of bar 11, which has more sellers. Bar 11 got 1R fairly quickly. So the bears that got short below here, market order or limit order bears that sold the high, made 1R very fast with a tail of 15, 14, 15, however you see it. They take profits and they go again for round 2. Leg 1, pull back leg 2. There's a tail on 19, so we know there's a trend line break. Leg 1, pull back leg 2, pull back leg 3. What happens after third leg? The market goes range bound. Here's that range bound price action. That's in the form of bear flag. 24 is testing 18's breakout point. This was my trade of the day. To be honest with you, I was very surprised the way the entries and worked out. Sell off leg 1, pull back leg 2, pull back leg 3. Now we have a completed price structure. Leg 1, pull back leg 2, pull back leg 3 with multiple third legs. So that's a wedge bottom within a wedge bottom, nested wedge bottoms, I believe they're called. Delete this. 1 minute. Okay, so we were talking about nested wedge bottoms and bear flags. Here's a nested wedge bottom, leg 1, pull back leg 2, pull back leg 3. Bulls go sideways. They're trying to get a trend. It ends up being bear flag. Yeah, bulls trying to get the bull rally, but ends up being bear flag, testing the breakdown point. This is the higher time frame EMA. Leg 1, pull back leg 2, pull back leg 3. Wedge top, it's the higher time frame EMA. This bar here is the bar I got filled on, testing the bar 5 bar on the 5-minute chart, testing bar 18's low. So this is the breakout point getting retested and it sells off. Breakout points usually get retested, and that's how I'm looking for my limit orders. There's a few more things going into it, but we'll talk about that later. So 18 breakout points getting retested. I sold here, I sold the low, my average price was right in the middle, and I caught about 20 points. On sim, again, I was trading sim these last couple of days, just trying to learn the ins and outs of limit orders, and I'm feeling comfortable enough to trade them live tomorrow. So I'm super stoked to get live because I'm tired of trading sim. So we have 3 legs lower, and we have 3 fractal legs lower. We didn't really finish talking about it, but it's just for the completeness. Yeah, we did talk about it, or did we not? Leg 1, pull back. Leg 2, deep pullback, trailing range behavior. Leg 3 creates a higher low. Now we're looking at this bull rally. Really nice looking bull rally on the 5-minute. This 1, 2, 3, 4, 5 is that down sell off outside bar. Outside bars are very contextual. If you see an outside bar, if you see a bull outside bar at the top of trading range, be careful because there's going to be more sellers. In this context, it was a bull outside bar at the end of a trading range, at the end of a sell off. Where are we? Where is? Oh, it's over here. It was not an outside bar. Excuse me. It sold off 38, 39. Create an outside bar in the 10-minute time frame. Okay, no, it doesn't. On some time frame, this is an outside bar. I guess 12. I guess 15 on the 15-minute chart. Sells off, rallies. And why am I talking about outside bar? Because it's at the bottom of a trading range. It's trapping bears, and they're trapped. They either short higher or they buy back shorts. In this situation, they had to wait for a really deep pullback, and I think that's a pain trade. It's best to just buy back shorts if you're long down here, if you're short down here. And it rallies. So back to the 5-minute. That's funny. I thought that was a 10-minute. Anyways. 38, 39. I think strong enough to get its second piece. 40 being the first pullback. 42. So now we have leg 1, pull back leg 2, pull back leg 3. We have a wedge top, which is a flag. Price action. So when we have wedge tops, actually, I want to do it like this. Nope. When we have wedge, nope. This one. When we have wedge tops, I think everyone's expecting this, but trading range price action, in trading ranges, the behavior can get, the price action somewhat gets reset. And in this situation, we got the unlikely event, and it was a bull breakout. And surprises usually get second legs. So we can look at this at the lower time frame and just see what I described. So there's a bull breakout that gets second leg to the upside. We would think with this much bearish price action, we would go a downside breakout. But the opening, we had a really big gap up, and we had a lot of bars above the moving average for the opening session, the trading range. I'll talk about that in 2 seconds. Trading range, bullish breakout above the EMA, pull back leg 1, pull back leg 2, pull back leg 3. This wedge top ends up getting a really nice bullish breakout with a rally. I generally would wait to get short or get long if I saw that this many bear bars, but we had a gap up here. We had a gap up with strong bull bars, so bulls are trapped, so you could get long a little bit quicker. I got filled, so I had a line here, and as 45 was going up, I just market ordered in because I missed my limit order and I caught that leg. It's up until right around there. 1, 2, 3, 4. Okay, this is the bar. I said I wanted to talk about bar 49 for a specific reason. That's the second leg. That's the start to the second leg. If you're looking for it, so we have a bull breakout. Market cycle resets with renewed momentum. So you could say, you know, breaking out above the EMAs, renewed momentum, breaking out above trading ranges, below trading ranges, renewed momentum. I'm just trying to read the price action from a momentum perspective, and 46, 47, 48 was good enough momentum for a second leg. Excuse me. 48, 49, trend line break, inside bar and trading range could reverse, but I think with this much pull pressure, 46, 47, 48 with a gap, it's trying to get second leg, that trend line break. Here's that second leg. We're in trading range, so it's a second leg trap. This is a second leg trap, pull back, wedge top, and it vacuums down. Second leg trap, second leg trap, second leg trap. Those are dangerous in trading ranges. Actually, hold on. Back to the 5 minute. Do two things here. There we go. Excuse me. There we go. Okay. See, that was the start of the second leg. So we see the candles. Leg 1, pull back, leg 2, go sideways. This is a bull flag. So this is that small doji we saw, and that has a breakout. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Second leg trap, we go to trading range on the 1 minute time frame. We're sideways for more than 20 bars. And Al always says, you know, more than 20 bars, your market cycle starts to reset. A lot of flipping, a lot of flipping, a lot of flipping. A lot of flipping and dipping, slipping and I don't know where I was going with that. So trading range, that's the price action we just looked at. Trading range, market cycle resets. This trading range is testing bar 8's breakdown point, and then we vacuum down testing bar 38. This is climactic price action that happened very fast, so we can draw in the legs. Bang. Bang. So now we know there's at least 3 legs down into support being the high of 38. 38 is the high of support because limit order trader bears got trapped there. They had their buyback shorts. So I'm looking to see, you know, and there's also trend line breaks here, but I don't want to make it too whatever. Okay. Back to the 1 minute. Where's my lines? Do you guys see any red lines here? Where's my lines? Oh wait, was I even looking at the right leg? Yeah. Where's my lines? All intervals. Oh, okay, I see. Hold on. Sorry about that. 1 second in it. Do I have to do it separately for every single one? Yeah. Okay. Okay, so look at the spikes. There's a spike break. There's a spike break. Okay, so we have this breakout point. Here's this line's showing these tails here. Breaks down. We have a trend line break right here. Breaks down. You guys see the 331 tail. That breaks the high here. That starts this next leg lower. Because trend line break, excuse me, whoa, I said that funny. Trend line breaks are what starts the next leg. Here we have opposite bars. Here's a trend line break. It's kind of a bad example, but I hope you guys get the picture of how to count legs in trading range because it's climactic price action. So it's very important that we understand what we're doing. Counting legs keeps us trading right, because if you're looking for another leg lower, well, this leg never got a second leg. Bar 68 is stopping right on the high, releasing the trap bears that shorted, the strong hands that shorted here and here. make money, but that's pretty tough. I would just reverse and short, you'd make more money. So this leg is testing this, then it rallies, leg one, pull back leg two, leg one, pull back leg two, pull back leg three. I try not to make these longer than 20 minutes, so that's why I was speeding it up. But just to be kosher, there's the 1 minute. This is back and forth trading. It's a trading range. So we saw the leg one down here. There's a leg one, pull back leg two, pull back leg three. And then on the 5 minute, that is right here where I just counted. Leg one, pull back leg two, pull back leg three, goes sideways, sells off. Leg one, pull back leg two. Trend line break here. Dang, I didn't even realize we haven't even gone over microchannel and gaps. Okay, I'm gonna speed this up. So there's that. There's a two bear legs. Leg one, pull back leg two, and then we rally strong three legs. Leg one, pull back leg two, pull back. Wedge top again, breaks out, and rallies for the bulls. So both sides had great legs to trade today, and even though the range was shrinking, it was very tradable. Let's go over the microchannels and quickly put in some gaps here. So I'm gonna do the gaps and then the microchannels. Gap. So then we can actually see what we're looking at. Remember, in trading ranges, gaps get closed. In trends, gaps stay open. So, that's no good. 50% is better, I forgot. Okay, that looks nice now. So these two first gaps got closed, sells off, no trading range gap, no gap, excuse me, no gap. We have a gap here that gets tested 24, which eventually does get closed. Traps are important. We talked a little bit about in the Discord how limit order traders are getting trapped here. So these are limit order bulls getting trapped that are going to have to buy back lower. We have a breakout gap. It's not the best breakout gap, actually. It's right under the EMA. A breakout gap would be a crossover like this, kind of. That's a loose definition right here, but that's a breakout gap, how it's crossing over the EMA. We have a lot of gaps open here. You know, with this kind of rally, I really didn't think the bears were going to do this, but it's trade range price action, and trade ranges gaps get closed. So stick to the system, stick to the plan, and you will be on the right track. Hope you guys are watching Systems Academy's 2 videos with James and Brad. They're putting out really good information that I have spent a long time trying to internalize. So if you see some similarities, that's good. That means it's working, because I want you guys to learn that stuff too. They are both great traders and amazing to learn from. They're dropping a lot of information, so check them out. I put the link in the Discord from time to time. So yeah, here's all the trading range gaps, and then we have microchannels, very tradable microchannels. 3 bars here. I think this first microchannel is quite difficult to trade because it's a gap up and a lot more people are bullish, but nonetheless, 3 bars, deep pullback, it sells off. That's met with bar 19. 3 bars here. Put it at the top of the pullback, put it below here, put it below here. You have a lot of room to play. 1.15 bars met on both trades, but you got to do a deeper pullback with this one. Then we have another 3 bars here that's not going to be met, but you put it here. You could trade to about the 50% level. We're in the 3rd leg, so you're going to have to scalp out anyways. 3 bar microchannel, 35 being the first pullback. Maybe you put it there. Your stop's down here. That's met. Maybe you buy the high. Your stop's not going to get hit. That's going to get met. Maybe you wait to 38. And that's great if you can wait that long, because then that's going to be the easier trade. And you're filled on bar 47. I'm trying to be a little bit quicker here, guys. So then we have another 3 bars breaking out with renewed momentum. You buy the inside bar, which is sketchy. You don't have to buy the inside bar. 1-to-1 is met. Trade really small if you're going to buy this, because your risk is all the way down here. And then here is also very tough. 3 bars, you just have to sell the close, no pullback. So that's not really the type of setup I'm looking for, because I like to get in on a pullback. 3 bars, you buy 75, and that's met there. 25 minutes, not too bad. If you guys learned something, share the show. Hit the invite to the Discord below. I'd love to hear you guys. I love the questions you guys are asking me. And yeah, I want all you guys to get paid out. If you learned something, share the show. I'll talk to you guys tomorrow. Have a good one. Bye.